Good morning. Markets are quite flat at the moment. Oil's still in a narrow band and futures on either side of the zero. That's Forex and commodities. In the US, we're waiting for tonight's February trade balance and mortgage data to perhaps tip the bucket. The dollar is at a two-week low thanks to a finally declining bond yield across the board, but equities continued slightly down at yesterday's closing bell, and the futures this morning spell more. A nice job openings, two-year high for February with a very traction in same-store sales. Sorry about that. New York bankers are thinking of leaving the state as tax hikes loom their way, while at the other end of the feeding trough, Jeff Bezos has said he endorses taxing the wealthy for the sake of Joe Biden's infrastructure bill. Amazon has been repeatedly criticized for paying little to no federal income tax, mostly recently by Biden last week. Canada's trade balance will also be in the books at 12:30 GMT with their trade balance and IV PMIs 19 minutes later. European indices were held up yesterday by the FTSE's 1.25% increase, egged on by the IMF's global growth forecast push up to 6%. The pound is marginally higher than euro this morning after the European Automobiles Manufacturers Association yesterday announced an 11% increase year-on-year in British car registration. That's a 453% improvement month-on-month, in case you're wondering. European investor confidence for April has doubled expectations to 13 points, but February unemployment remains static at 8.3%. The French 12-month bill rose slightly on yields at yesterday's auction compared to an equal drop in the shorter-term 3- and 6-monthers. Again, perhaps an indication of future optimism. Looking ahead, we'll be having service and composite PMIs later this morning from the UK, France, Italy, Germany, and the Union. Chinese markets are markedly down, including a 0.87% drop in Hong Kong. The Nikkei, Australia, and New Zealand are up with the yen in a very slight upward inclination. Both Australia's construction index and service PMIs are up by 4 and 2 points respectively, the latter missing expectations of a more pronounced improvement. Nikkei futures are still optimistic for now, but there's a reversal in the works, as we can see from that double bottom and the engulfing bear at the end of this one-day chart. I'm guessing this morning's done, but like I said, the futures market is still anybody's playground. Saudi Arabia yesterday announced it would be selling half of its oil pipeline business to a consortium of Chinese and American investors for $10 to $15 billion. Meanwhile, oil continues fluctuating in the $59 region despite a welcome 2.6 million barrel drawdown, according to yesterday's API report. The EIA will be weighing in at 2:30 this afternoon, and I don't know if anybody's been paying attention, but the global pandemic retreat is being felt in cocoa quite clearly. We have another 4% increase in futures this morning as demand increases in Europe and China. As you can say, there's a pretty volatile commodity here. It's trading on either side of a fluctuating 21-day moving average. We're oversold at the moment. Volumes are low. In short, a scalper's wet dream. The technicals are quite clear, but beware, this trade is quite controlled and suppliers will cut back production to milk the cow for all it's worth. SOny is planning a Columbia Pictures theme park in Thailand. Attractions will include Jumanji, Hotel Transylvania, and a chance to climb up Jennifer's torch. Distant cousin Toshiba could go private through a $21 billion share buyback. CVC Capital is suggesting a 30% premium over current share prices. And GM is disregarding administration obstacles. Its sales in China were up nearly 70% this last quarter. Quarterly earnings around the corner. LG is already saying it expects to see about $3 billion in profits for Q1, and Samsung 8.3, a 17% increase on last year. And so, with optimistic sounding in the crisp spring air, we bid you au revoir from the breakdown.